Hey guys, I don't know what that was, but give me a minute. Okay. Give me a second. Give me a second. Can I edit the 7th? Yep, okay. Solid. Alright. I'm about to start it. Traders chat. By the way, hey and hello to everybody, to well, whoever's on YouTube, and welcome to the stream. We're gonna go over many different things, and let me just set a couple of permissions over here, advanced permissions. But everyone should yeah, okay, so okay, so wait a minute, what is this? It should be me. I'm going to disable the streamer mode, and I'm just going to set it on do not disturb. Okay, I just gotta do some settings over here on the channel real quick, then we're going to get into it. So yeah, just give me a second. All right. All right, going to just let the traders know, and we are going to be off to go. Good to go. Give me a second. All right, so okay, so it should be created right now. I'm just going to set it to voice activity. Okay, now I will also share my screen over here on Discord as well. So pretty much I just want to disable the sounds of Discord real quick. So give me a second. Okay, it's this one. All right, so I'm just going to drag it down. All right, so how's it going, Vivek? If you want to request some speaking permissions, I can give them to you, but just let me know. The thing is, I just want to go over 2 trades that I've taken today, because it's just going to give you a little bit more perspective. It's not like any other strategy, by the way, so don't expect me to talk about smart money concepts or anything like that. I'm just plain support and resistance. Also, I use a couple of indicators. I use well, a couple of everything pretty much. I use fair value gaps from smart money concepts themselves. Now the thing is, I have taken 2 trades today since I've been awake for majority of this day, since around 8 a.m. 9 a.m. I've taken 2 trades, including this GBP USD counter trend buy. Now you might think that this is actually not the case, but let me just grab the receipt over here, because this actually indeed did happen. It's going to hide the lot sizes and everything like that. Give me a minute. But it's over here. It's literally over here. So if I pull in the MT5, this is pretty much what happened. I entered twice, 2 orders. I've risked less than 1%, and I got out right there. And this is MT5. As you can see, it moves. This is not a picture that's been edited. This is literally MT5. I can switch it to another chart over here, and I've taken this NZD-JPY, which was a smaller one, but we will get into both of them. So, by the way, if you have any questions but you don't want to speak, you can also type in the voice channels chat that Discord has created, or the voice channels chat that the bot has created as well. Both of them I will read. So pretty much I will want to save this for the second explanation, but I want to go to the NZD-JPY, because this is, and as you can see, its risk to reward is not exactly good. But in my trading, I don't go for the risk to reward, I go for the ROI. So return on investment. When I see an opportunity, high possibility that one setup is going to go in, or the price is going to go in one different direction, that is, you know, that I can observe the possibility of, I will take that trade. Whether or not it's a high risk to reward, whether or not it's a small risk to reward, I will take the trade because I see an opportunity to make money. Now, the thing is, on this NZD-JPY, I knew from the get-go that this trend over here is not strong at all. Now, how can I observe the trend strength? It's very easy. So simply, I use a MACD, which is, and give me a second, I'm not a subscriber to this trading view. I don't really use that many indicators, and I don't like having them on at once. By the way, I like switching them out. So over here on the MACD, what do we see on the MACD? Now I use different type of MACD settings. I use an 8, 21, and a 5. Okay, so if you want to use this, then these are going to be my settings. You can pause the stream. I'm live on YouTube as well, but this is pretty much what's happening over here. This is my MACD settings. Now, why did I enter this trade? And what is the trend strength? How can I observe that? So I have multiple different time frames that I observe this on, but I want to highlight what I'm talking about actually first. So I don't really watch the histogram itself. I watch the lines more like. So if we disable the histogram, this is pretty much what I'm looking for. So I am looking forward to seeing if the lines are going up or going down. Is the blue being pushed up by the orange one, or is it being pushed down? Now, if it's being pushed up, obviously the histogram helps you with this a little bit. Then it's going to be showing up as bullish on the histogram itself as well. Now, the thing is, this in itself, in one time frame, this is not enough to measure the trend strength. This is a good starting point, but this is not enough. We're going to use 4 different time frames to measure it, and we're going to use 2 different instances to measure it. So 1 hour is showing us that it's pushing up, and we are right over here in time before actually it rejected over here, because this is pretty much where we got out. So we are going to see that it's pushing up. 1 hour is good. This is our anchor time frame, what we are basing the trade off of. It's pushing up. Okay, so 1 up, it's the 4 hour. The 4 hour at that time has been pushing down, but more leaning towards getting towards indecisiveness. So if you pay attention there, it's pretty much getting towards being an indecisive point. Now, what about the daily? Daily has been getting back from being indecisive, and getting back from being bullish towards being indecisive. Now, what about on the 15 minute? These are the 4 time frames we are going to use to measure this. On the 15 minute, for me, that was looking like it has been pushing up over here, but then got back. And this is pretty much where I entered. But I still wanted to enter this trade because I was looking on, well, multiple different aspects. Not just the MACD itself. But the MACD has been showing us that this trend overall, this 1 hour trend of buying pressure, this is absolutely not strong at all. That's pretty much what it was. So we are going to get this off the chart right now, and we're going to look at many different things. So on the daily, if you go to the daily, let me just can I hide everything like I used to? Yeah, hide drawings. So I'm going to delete this over here as well. Wait for it to disappear. Okay, let's just move it out of the way. So over here, what do we see on the daily time frame? So on the daily time frame, we see one very simple thing. The moving averages I have are two EMAs, which is pretty much the 10 and the 23. Now, the 10 and the 23 are very nice moving averages to pretty much highlight the average price of this current momentum trend. It's not for the overall direction of the market. For example, this, overall we see it, if we zoom out more, overall we see it going up. Overall we see it going up. I don't want to pretty much pay attention to that really as a day trader. I just want to see what the momentum is doing at this current moment. Now, what is it? Okay, I just got the drawings back. I don't want to see them right now. So what is it currently doing? Currently, it has rejected the previous daily candle, closed with a good rejection. Good rejection right there, as you can see. Very nice rejection. Why is it very nice rejection? Because as you can see, the previous daily candle, this is our previous daily candle which I'm hovering over. The previous daily candle literally closed in a very weak manner, rejecting our midpoint, which we are trading off of right now. If we get it back, yes, rejecting the midpoint which we traded off of right now. Now that is one thing, that's a very good thing, but it's not enough for us. It's rejected, so what? So overall we have returned on the daily time frame to this average price, this momentum average, and I've seen that this today's candle we have been rejecting from over here, which is pretty much my bottom of the barrel of a solid support and resistance. Now my solid support and resistance is my key levels. The dashed lines are my fibs. Those are the bounce points, pretty much. Let me just delete these as well because those are something different. Now what are these two? Hey, how's it going, GT? If you want to speak or ask any questions, make sure to type into the Discord chat over here, and I will just reply to you. By the way, I am streaming live on YouTube. I've been explaining one trade I've taken. It was a small trade. Then the other trade was a GBP USD buy, which was the bigger one. It was a counter trend. Let me know if you guys want to just straight up jump to this this over here instead of the other one, because the other one is a smaller one, and over here I have the receipts, by the way. So this is MT5. And I can show you it works. This is literally not a picture or anything like that. I just don't want to show my account number. So this was a small trade on NZD-JPY. I bought from here to there. And on GBP-USD, I bought from these 2 points up till there. But yeah, as I was explaining, I will get into GBP-USD after NZD-JPY, by the way. I was just having a train of thought over here why I actually took this trade. So on the daily time frame itself, we have been returning to the average price, the momentum average, rejecting it since yesterday, and also we have a support area which we are using for the trading arena's bottom right here, which has been rejected too. So that's another reason why to enter this trade. Now over here on the 1 hour time frame, where it's actually starting to be relevant, the reason why I entered this trade is because, well, many different reasons. But the first reason is that the average price over here are moving averages, which are, like I said, two EMAs, the 10 and the 23. These two are disabled for me. So the 20 and the 23 is pretty much closed up above, which means there's likely some sort of shift in momentum right now over here. Now, this 1 hour Fibonacci is an entry exit that I use, and I got out right on this point. Well, somewhere there, maybe a little bit lower, but I got out near this entry exit over here. I was looking to see, quite frankly, to if it's going to close above it on the 15-minute, but it didn't. I got out somewhere here after it rejected with this candle. I got out somewhere there, and pretty much what happened is I made a good decision because I observed from the MACD previously on multiple different time frames that this trend has not, like it doesn't have enough strength to continue consistently going up to the upside. Now, another reason why I entered this trade is, let's add another indicator, but I only use these indicators for extra confirmations. I don't use these indicators to base things off of them really. I just pretty much, I like my support and resistance is confirmed by these as well. So on the Bollinger Band over here, this is standard Bollinger Bands. Bollinger Band's middle point, we literally close above it, and we reject off of the middle. It's pretty much, it's as simple as it could get. So let's disable this now. So overall, by the way, on the Bollinger Band, we have, let's get it back for a minute. On the 4 hour, we have been rejecting from the bottom part. Rejecting from the bottom part, from the support area, and it's not reached the middle point yet. So I was like, okay, it most likely has some sort of room to move. Now, if we add an RSI, I use many different RSI settings, but the first RSI setting for the 4 hour, I use a 28 with 65 and 35 extremes. So over here, if it's in the middle, then I know for a fact it has room to move. It's kind of undecisive whether or not it's going to go in the upwards or downwards direction, but that's not really what you should be basing your trade off of. You know, one single indicator, or you know, not like no price action analysis, support and resistance, whatever you use, it's not going to be enough for you to confirm a trade off of indicators. You don't trade off of indicators, you use them for confirmations at best. Okay? So over here on the 4 hour, what do I see with this 28 RSI? I see that it's in the middle. And over there, where it has been, I've seen that it's above the 50 level. Right around 51. Not so much above it, but it's above it. So I was like, okay, it closed above there, and it most likely has some sort of room to move because it's not capped out at an extreme. So I go down to the 1 hour time frame, and I adjust this. I adjust the extremes to 70 and 30, and I also adjust this to 14. So pretty much what happens is, then I get to see the same exact thing. We are coming from the extreme over here. Came right around the 50, and we pretty much are climbing up. We have room to move because we are not at an extreme, at right around the 50. So that was one of the reasons as well. Now if we go to the 15 minute, we can even lower this RSI length over here, and we raise the bar a little bit above to 80 and 20. And over here it started getting a little bit tricky, but right when I entered, which was over here, I've seen that it's in the middle, so it has room to move. So that was about it for the RSI. So after that, what happened is, I know for a fact many different things now. So keep in mind, what do we know? Let's list these things. We know that the trend is not strong enough because of the MACD multiple time frame analysis on the 1 hour, 4 hour, daily, and 15 minute. We know it's not strong enough to carry on a big uptrend. But we do know one thing. We do know that we have a strong level or a reaction point, this midpoint over here in the middle, that we are rejecting off of. We do know that we are rejecting off of one entry exit right in the midpoint. We do know that we do not have a roadblock up until this point, and we do know that the price has room to move. So let's take the trade. So I took the trade with a very, very conservative stop loss somewhere here, and I only traded till here. I wasn't in full size of my position, so I made a minor profit. But moving on to the other trade, but by the way, GT bot, I want to tell you, I'm not really looking for risk to reward, by the way. I'm not really looking for that. I'm looking for the ROI. Because if you observe the probabilities, and yes, I lose sometimes as well, but when I lose, it's strictly out of my mistake. Because when I trade, I put a large enough stop loss, so I allow the market to breathe. And this is a very, very it's a very, very widely used buzzword, but let me just explain. A lot of people, when they quote unquote allow the market to breathe, they don't actually do that. They don't actually do that. Because this market, you have to know, this market is not picture perfect precise. It is not. It's a controlled chaos. Now, why is it a controlled chaos? Why is it a chaos in the first place? Well, if it wouldn't be a chaos, then it would be a very, very one-sided market with pretty much the exact same sequences repeating in the exact same manner. Now that's not what we see. Yes, we see similar things happening, but at the same time it's not the exact same. It's always unique. You don't spot an exact same movement in the market twice. So that way it's a chaos. Now why is it controlled? Only reason why it's controlled is because of one very simple thing. There are people who can capitalize off of this market consistently, and they are able to make profit and make a living off of it, perhaps even riches. So therefore it's a controlled chaos. Now, with its chaotic nature, you have to allow it to breathe. If you don't want to lose 50%, 60% of the time, maybe even 40% of the time. When I'm really paying attention and I get good reasons for my trades, my win rate is close to 95%. So the thing is, and it's not because of, I'm some sort of superior trader or anything like that. I just observe the probability and I allow it to breathe. With my previous knowledge, years ago, when I was actually trying to time the market so precise, the thing is, what I messed up so bad is setting a tight stop loss. Tight stop losses just didn't work out for me. They just didn't. I like winning. I don't like losing, even if it's just probability. I like winning. And therefore, I'm just going to act on the ROI itself because I can observe a probability that most likely 95% of the time this is going to go up. Therefore, I'm going to enter into a long because I'm here to make some profit. So yeah, this was pretty much the first trade. Now we are moving on to the bigger trade, which is going to be a little bit more interesting because this is a counter trend trade. So you might say, oh, you don't want to do counter trend, but in reality, you can do counter trend. You just have to observe your boundaries. Now, this trade in particular was a really, really, well, everything aligned very, very well. I don't think I'm going to find a trade like this for the next 2 weeks, or possibly something like that. But at the same time, everything just aligned really, really well. So let's start from the beginning. If we go out to the daily time frame, let's just hide my drawings. We do not see, a really, really big thing that we can capitalize off of despite this range over here, and we are hitting a range bottom. Well, then that's one thing. Most likely we're gonna be buying because obviously we are departing from the moving average, but the price itself likes to keep playing around the average. We are hitting a range low. Well, most likely gonna be a buy, but it's not enough yet. So we show the analysis once again, and pretty much these two blue boxes over here are my daily trading arenas. I could show you how well this works, but the thing is, this is pretty much just a daily ATR measured from the opening of my daily candle to the bottom and to the top. Most likely, the day, if it's going to go to an extreme, is going to reach somewhere here. Or if it goes even further, then it's going to reach some deviation of this. So the next, target, if it really just goes further and just disrespects this as a whole, and keep in mind, this is not really a support. This is just a boundary for it. Because the daily ATR is, well, to keep it simple, it's pretty much 14 or whatever amount you set for it. But I think the default amount is 14. Yeah, 14 days worth of average over here. Average true range. 14 days worth of movement. That's pretty much what it is. So what we do over here is one very simple thing. We measure the previous candle's daily ATR, so which was, well, if you read over here the number, it's going to be around 886. You're going to measure that somewhere, yeah, right there. It's going to be somewhere there. You're going to measure that from the next daily candle's opening. You're going to measure that to the downside and to the upside. Now, once you have done that, you have to set two lines, which I have deleted because I delete them afterwards, but you set two lines at the top and the bottom, and then you measure Fibonacci, and you add a special value for your Fibonacci, which is the 10% and the 90%, and if you add these two, you're going to mark the 90 and the 10%, and that's pretty much your bounds for this. By the way, I will go away for like 2 minutes. I will just close the door real quick, so be right back. Okay. All right, I'm back. So yeah, so that's pretty much what these two boxes are for. And I can demonstrate this, I can demonstrate how well this works on a random pair. So let's select this one, for example, and let's delete the analysis for it. So I'm going to demonstrate how this works. So for example, let's say we are beginning this day. We don't know where this is going to go yet. But the only reason why I'm picking this is because it's an extreme. I could go to any extreme. Possibly this is a news scandal over here, but we can test this afterwards too. So the thing is, we are measuring this day right now. So if we are beginning this day, then the opening price is going to be over there. And the candle that we're going to be measuring is the previous one. And we are on a daily time frame, keep in mind. So pretty much what happens is, if we look on, like in this corner, once we are hovering over it, it's 1.645. So we're going to measure 1.645. Give me a minute. Yeah, somewhere there. And this one exceeded it, but there's no problem. I'm going to show you why. We just have to be somewhat precise with it. Alright, so 1.645. Now, if we measure 1.645 as well, this is most likely going to be the middle. But you don't want to use this as some sort, yeah, it's the middle right there. But you don't want to use this as some sort of a end-all be-all. This is literally just for stop losses, for targets, for healthy targets. That's pretty much what it's really for. But a lot of times, especially on gold, I tested this a lot, and I have some crazy analysis going on right here. So keep in mind to pay attention to the proper line. But give me a minute. I'm just going to find the one that really amazed me. I think it was right here. Yeah. So yeah, 20. It's about there too. So wait a minute. Yeah, it's I think this one. 26. Yeah, it literally went up somewhere there. 26. Look at it. But it's not really something that is really just most of an end all be all or something like that. You don't really want to look at it that way. It's just a boundary for you to notice, okay, well, in order for me to have normal market movements, so normal market conditions, we have to stay within this bound. Within this bounds over here that you have to calculate every single day is pretty much your normal market movement. So one of the reasons why I bought this is because we are hitting the bounds over here. But it's not the sole reason. So the other reason was the daily time frame. Like I said, we are hitting this bound is pretty much the constellation's support. It's the constellation's lower part. So that's another reason. Second reason, or third reason I should say, is that we are so overextended on the 1 hour time frame. We are very overextended. Very overextended. Zero to, like, it's literally not going back. We have imbalance right here, imbalance, which is fair value gaps pretty much. We are overextended. We need to go back. Fourth reason, we are hitting a support level over here, which is this solid orange line, which I will delete the alert for because I don't need it anymore. So the solid lines on my chart are the key levels, keep in mind. So we are buying off from this. We're buying off from this. Another reason is going to be our indicators once again. So Bollinger Bands, for example. Bollinger Bands, we are going so much in the extreme for so long. We have been going in the extreme for so long, as you can see. We even came out of it. So that's one thing. Then if we go to the 4 hours, it's doing the exact same thing, if it's not more radical. And the daily is doing something similar as well. It pretty much hit the lower part of it and it came back. So these are already confirmations that yes, probably we should be looking forward to you know, getting into a buy soon. Now let's check out the RSI. The RSI, and keep in mind, all you want to do when trading, you're going to want to have reasons to buy. Now the RSI over here on the 4 hour time frame, we don't really see anything exceptional with the 28 setting. But if you go down to the 1 hour and change it to our good old trusted 14, we can see that we are starting to get overextended. Overextended by a long shot. Overextended, support, We are at the daily ATR's bounds. We are in a daily consolidations support range. And it has been coming down. It's overextended. Bollinger Bands. Every single reason. Piling up. Then we go down to the 15 minute. We change it to 5. And we change these to 80 and 20. And pretty much what do we see? Overextended. It has not been getting... It's not been getting overextended to the upside. It's barely had any upward movement. As you can see, overextended many different times, but over here we have confluences lined up. Then after we are done with this, or aside we can click this out, pretty much another reason. We have entry exits. Now why did I mark this one in specific? Because, and don't get me deceived, I had to really think about this Fibonacci marking over here. It's not like I just, whipped this out and, I knew where to place it right away. It's not really like that. Overall, I was looking forward to marking this Fibonacci over here, something like this, or something like this, but, it just hit me like, this is not relevant. What am I even trying to do with this? This is absolutely not relevant. It happened over here. What am I trying to do with this? So I just kept looking to the left for the biggest possible move of a Fibonacci to mark, which is relevant. So it was this one. I marked this one. Very amazing. Hey, how's it going, brother? Yeah, so pretty much I marked this one instead. And by the way, when I'm marking Fibonacci's, I'm really looking forward to seeing how well they react with current price. So obviously this happened pretty much in the first week of our month over here on Friday. This happened over here. So it's pretty old in terms of 1 hour time frame. But that's not a problem. That's not a problem at all. If you see it rejecting, if you can see, even on like yesterday, Monday, I didn't trade yesterday, I was traveling across the country. But even yesterday over here, as you can see, it rejected very, very flawlessly. 23 level. Rejected right there. And then, of course, we have rejections for the 38 over here. For the 0.5, we have rejections all the way across. Even this is a rejection. Where there's price bouncing even just a little bit, that's a rejection. Obviously, the bigger the rejections are, the better. But that's pretty much it. So, 618, we have the rough area getting hit. But overall, if most of these levels are confirmed, then it's good to go. So, I've seen that the 78, and keep in mind I don't pay attention when I'm trying to place a trade. I don't pay attention to the 0.9 and the 0.1. Those are just levels that I added for different purposes. So over here, what am I seeing? I'm seeing that this 78 line, which is this thin blue line in between everything, is right around the 1 hour candles, one of the 1 hour bearish candles tops. So I set that as my buy stop limit. Why did I set that as my buy stop limit? That's one very, very simple reason. Is because that's an entry exit which could reject the price. And by the way, let me show you the receipt once again to prove you that yes, this was my first entry, second entry, and I exit right there. Right on the top. So what happened? It closes above. It goes up, breaches the top, breaches the entry exit as well, closes above it. Now it's confirmed for me. This trade is practically good to go, either up to this midpoint over here, and quite frankly, if this many reasons why I didn't take over here in the midpoint, but this would have been my first take profit, this whole green area. But instead I held till the next over here. This was a 618 if I'm not mistaken. Yes, 618 level, 618 entry exit. I held till over here. The only reason why I did that is because I observed that we are literally at the bottom of today's ATR's trading arena. We have a bounce point below this monthly, sorry, not monthly, my vocabulary is messing up. Below this midpoint over here, between two solid levels, we have this bounce point, this dashed line over here. This is a daily Fibonacci. This is a daily bounce point. We have this bounce point. We have the daily ATR's trading bounce over here as well. And some news just came out right then and there, which propelled it, but it took a while till our take profit got hit actually. So the news came out, and the only reason why I decided to hold during this USD Empire State Manufacturing Index is because it's not the general high impact news. So it's not the CPI, it's not the PPI, it's not the NFP, it's just some random news. So pretty much the only reason why I actually decided to hold through this was because it's just some random news. But I saw that it's radically one-sided. So it came out with this. This is good for me. If it's a red, if it's bad for the USD currency, then it's good for me when I'm trading pound against the dollar. Because if the dollar loses value, then this, obviously the pound gains value in this comparison. So I observed the forecast and the previous. So the previous was 14, and the forecast was greater than, of course, the previous one. So they expected it to be good for the dollar, but it was radically worse. I mean, 4.9. That's almost a 10x. How to say that? It's almost 10x worse. So I had through this all because I had technical and fundamental bias of, okay, most likely my entry exit up over here is going to get hit. So I had through that all, and this is pretty much how I placed this trade and the previous other trade. And keep in mind, I risked less than 1% on this because I didn't get triggered into my other scaling, but I made quite a decent amount on this one. So I'm pretty happy with this, especially for it being a counter trend. And now we can possibly get into really just looking for a new trade. But if you guys got any questions about these two trades, especially this GBP/USD or perhaps even the NZD/JPY, feel free to ask them either in the Discord chat or perhaps in the YouTube chat, which I will have to open, by the way. I've yet to open that, which is my fault. Okay, just muting that. All right, let me just get the chat going on. For some reason, my add-ons just blocked the live chat. All right. So that's pretty much the breakdown of these two trades. And trading is not an easy job. You have to keep in mind, trading is not an easy job. And even for the people that have years of experience, it's not an easy job. The one thing that you have to keep in mind with this is that it's not really a rules-based game, and there's always going to be somebody that is doing just as good, if not better, with a complete different outlook on the market, or at least complete different technical analysis, because the outlook must be similar somewhat for it to work out. So that's pretty much what it is. It's pretty weird of a coincidence, because one of my bros, I asked one of my bros what he was looking at, because in the morning I didn't really find the setup, and I asked what he was looking at, and he told me he's trying to get into NZD/JPY and NZD/USD, and then I let him know that I found the GBP/USD buy, and then he sent me a screenshot that he's already in this. So yeah, he took profits a little bit lower than me, but he took a majority of the move as well. But yeah, another thing I want to highlight, why this ended right over here, is because of one very, very simple reason. Now, if we add a daily ATR, over here on the ATR, we can observe it says 903 with the most recent data, 903. Now, if you open a calculator, let me just refresh this a little bit, 903. Okay, so we open a calculator over here. If we calculate 903, and we divide, by the way, this is 90 pips. This is 90 pips, 90.3 pips. So we divide this by 3. This is supposed to be 30 pips in current day is one wave of movement. On average. Obviously this is not going to be picture perfect. This is on average. So on average, right now, a wave should last until 30 pips. Now, if we divide it by 3, so 10 pips, this should be a realistic goal for a trade. This should be a realistic baseline goal. This, most of the time, will get hit. Obviously, we capitalized of 34 pips in this instance, but the news helped to pretty much make this a greater wave. It was pretty much a 50 pip wave over here, measured from the bottom. It's 50 pips, but as you can see, it faces heavy rejection even now. even now. Even though it's at support, even though everything is aligning, it faces heavy rejection. This midpoint is facing heavy rejection. That's, the one of the reasons for this is because the wave is exhausted. This needs to cool off. Probably, it will go up most likely. I'm not sure. I'm out of this trade. The only reason why I'm not in this trade anymore is because I don't know what's going to come next. You don't have to know every single market movement to make money in this market. Obviously it's ideal to know something about it, but I could tell you something about it right now as I'm doing right now as well. So yeah, you have to observe the probabilities. That's pretty much what it's really about. You have to observe the probabilities when it's aligning, when you know that majority of the time you're right or you're going to be right, then you have to take the trade. Because without risking, you're not going to make money. You're not even going to lose money. But stagnating is even worse than losing because you're not learning anything. So yeah, these are the two trades I've taken today so far, and perhaps we should look for another one. But it's quite an exhausting process, but I could show you guys how to mark up a chart like I do. I've been revising my analysis a little bit the past couple of days, just so it's not so cluttered, even though right now it looks cluttered to the average trader as well. But keep in mind, you don't want to trade without information. Like, all the information that I have on my chart is absolutely mandatory. Obviously, if it wouldn't be, I wouldn't mark it on my chart. It's absolutely mandatory because for me, I just cannot unsee these levels. I cannot unsee these levels. Every single bounce point that you see on this market, every single movement happened for a reason. Even these where I don't mark the midpoint, it's literally a midpoint because it's between two solid levels. If we mark a Fibonacci in the middle and we apply the golden ratio, which is pretty much from the 38 to the 618, as you can see, I'm going to draw this rectangle over here. As you can see, this is right in the middle. All those rejections. Very nice. And it goes up to the top range many different times. It hits the top range. Even over here it hit the top range as well. If we drag the 10% in, it hits the top range many times. So these are absolutely mandatory levels in my opinion if you want to have a high probability trading method, because it's not really a strategy. And for long I really just went for having a rule set and just following a certain parameter every single time, but it's not really how the market works. Yes, you can make your rule set so that it's not 100% rigid, but at the same time the only problem with that is the fact that it's just not going to work in certain market conditions. You have to use perception rather than rule sets. You have to use the perception ability that you are gaining. The thing is, my friend told me this months and months ago. He told me that the only reason humans, well, besides getting into religion or spirituality, I could talk about that as well, but the reason why humans on a physical level were able to be the top of the food chain is because they are able to adapt rapidly. So they're able to adapt so much. We are able to, like, our adaptability, our skills to adapt is insane. And this is pretty much the only reason why someone would stay on top in the markets as well. You have to adapt. A lot of people are complaining about the market conditions, and don't get me wrong, there are certain market conditions that are trash and there are certain market conditions that are good or better. But at the same time, at the end of the day, it's going to be market movements, and it's going to be somebody who's going to take the money home, and there's going to be somebody who's going to walk home with a loss. So that's pretty much what is going on, and you have to look into yourself, because if something is not working out in your trading, then it's really easy to blame the markets. It's really easy to do that. Like, it's really easy to just say, okay, the markets are not doing good enough, and whatever, and just brush the responsibility off of you. It's not even to someone else, it's just to yourself in your eyes. If the responsibility is not on you, it's just a lot more easier to just go to sleep knowing, like, okay, well, it's it's not my mistake. But yes, it was your mistake. And for long I didn't realize this. I used to do this as well, don't get me wrong. I used to do this as well. And for long I didn't realize. I just, traded blind. I had to get the proper information first of all, then I had to decipher the proper information. It's not really, much of a puzzle, by the way, if you really just apply your brain like you would in a job. Like you sit down, like it's not really a game. You sit down as if you were playing. For example, if you really want to compare it to a game, compare it to a game of chess. The game of chess is probably one of the games that would make you think quite a bit harder in certain occasions. So the thing is, in trading, your money making ability, yes, it might be your stuff that you know, but by the way, okay, wait a minute, I'm just going to delete something over here in the chat. Okay, so it might be the fact that yes, the market conditions could possibly be worse in certain occasions, but dude, you can capitalize off of it, and it's the responsibility is only on you. It's on no one else. No one else. So that's pretty much it. All right, I think we should mark up chart. I think that's going to be the next step. So let me know if you guys got any ideas of what chart should I do. If you guys want me to analyze anything, I could do that for you. Just write in the chat. But if not, I will most likely just pick one of these and just go with that. We'll wait about a minute or so. But I will check out a couple of markets just in case. And I will. Okay, I don't have drawings over here. That's good. One of the first things I do, by the way, when I go on the chart is I check the MACD. Like what trend am I actually getting myself into? So, okay, well this is not indecisive. That's what I like about it. This is well, it would be good if we could secure a short position, but it's already going down. So I don't know how the levels are looking like yet, but we are possibly not going to trade this. But it really depends on what the levels are going to be looking like. But the MACD overall is looking good. So we're checking on 4 different time frames. I like to use the 1 hour as an anchor or the 4 hour, but anything above or below that, it's not really good. I'm a day trader. I don't like swing trading. I don't like doing it. I just simply do not. The thing is, I have time to sit down every single day and trade. And the thing is, swing trading is good for people who might be working a day job. Well, this is my day job. So the thing is, day trading for me is just a much better alternative because you can get out, in the day, and you can get you can get in the day and you can get out during the day. So it's a really good thing. By the way, let me just adjust my volume settings a little bit, so don't mind me. Something like this. All right. So therefore, this market, if you don't have any, okay, just checking the chat right now. If you don't have any requests, then I will just analyze the AUD USD. So the MACD is saying to us on the 1 hour, 4 hour daily, and 15-minute time frame that most likely this trend is tradable. And I only use the most likely expression because we don't know yet. We didn't do thorough analysis yet. So that's the next step for us. So we have to get proper support and resistance levels. Now the thing is, I will mark myself a 4-year boundary, which is not really a set in stone boundary. If you need some more data, then you can obviously gather more data from previous market, but it's not really something that I would want to exceed, but it's not something that you cannot exceed. All right, so let's hop to a line chart. Now the first step in my analysis is to get some key levels. Now getting key levels is most likely going to be right around these line chart highs and lows. Now the thing is, after we get a couple of them, we're going to switch back to the candlestick time frames and we're going to see how well they reject. We don't want to clutter our charts too bad. So over here, pretty much maybe something like this, or yeah, well, this is definitely going to be one of the key levels. And possibly, yeah, this is what I'm going to mark it with because it's just recent. it just happens to align with this one over here because that probably rejected off of this one, just, you know, in a different type of setting. So maybe it was over here. It's a rough area, so don't get me wrong, it's not an exact point, it's a rough area, and we will highlight its rough areas after we actually get our boundaries for it. So pretty much what can we see? We are eliminating lows, we are eliminating rejections to use for more key levels. So we have eliminated this one, this one, this one. We have two over here. We eliminated this one, and this one. We still have this one and many others left. So keep in mind, let's mark this one and try to find something that is rejecting. Now we are seeing the exact same rejection points. So this most likely has been some sort of midpoint rejection or something like that. But, you know, obviously we don't want to duplicate levels based on the same exact rejection points. So let's read justice to test this one over here. And this one could be used. The reason why it could be used is because of one very, very simple thing. One very, very simple reason. So as you can see over here, rejected over here as a resistance, and then support, then resistance, then support. So many different rejections, very good level. We can use this, absolutely. And I'm just going to align it to this one because it just happens to be perfect. Yeah. Or perhaps we should just drag it a little bit above. Yep, something like that. So now we have two rough areas. I'm going to collect more, perhaps another one. Then we're going to get into Fibonacci marking and doing the same exact process on the weekly and the daily time frames. So let me just find one real quick. Probably the next one is going to be here. Yeah. Yeah, this one's looking pretty nice. I mean, how about this one? Yeah, this could be the next. The thing is, you have to be really careful, and you have to bring in actual thinking into this. Like, you actually have to think about what you're going to do, where you're going to mark this, because if you do not think, you're just going to mark, you know, everything flat out, is just trash. You know, you are cluttering your chart and you're wasting. You're probably missing out on some crucial information, because if I were to place a level in between just in case, yes, there could be a rejection point, don't get me wrong, but dude, you have to realize that's a midpoint between these two levels, and the only reason why it rejects is because it's a midpoint. If you don't see prominent rejections off of them, which are not another level's rejections, if you don't see prominent rejections between them, then it's not good. It's simply just not good. So is this one good? Well, rejected right here, which is another rejection for this one, but let's not use this one for the one that we are trying to mark right now. But we do reject it over here, not on this one, but the previous one. We do reject it over here as well. We do reject it over here as well. So we have multiple rejections, and yes, the thing is, price went up over here when it rejected this one to this point as well, but we have to keep in mind that this level is a good level as well, because it came down over here, and it rejected right here as well. So 3 levels right now. We are not going to be using any more, most likely. Now let's mark and validate these levels on the monthly time frame. So what we are going to do is we are going to search for the most recent prominent Fibonacci, which is probably the prominent but not probably, it's the prominent move that happens. So the prominent low, prominent high. So is this prominent? Yes, it is, because it followed by a good rejection. Is this prominent? Yes, it is, followed by a good rejection. So we drag it from here, from the start of the push with the bullish candle, from here to here. Now, we have to extend this a little bit just to see how well this reacts. We are not going to mark this if it doesn't react well. So it validates this level, so therefore we already have 2 rejections. It rejects over here, it rejects over here as well, it goes up right there, rejects off of this, rejects off of this, rejects. Okay, this could be used. This is a very, very usable Fibonacci. Now, why wouldn't we mark something like this, for example? Is because this one is just bigger. It engulfs, like it literally engulfs this one. So maybe this could be a weekly, perhaps, but at the same time, this engulfs the one that we were trying to mark the other one over here, which reacts as well. Don't get me wrong, but this is one is just more precise. So what we're going to do is we're going to use the same exact color. We're going to use a dash line for the monthly. This is our monthly fib. Something like this. Then we delete this, and our monthly time frame support and resistance marking is officially over. We go to the weekly and we set this boundary from 4 years to 1 year. Right there, exactly precise. 16, 16, that's good. So this is our boundary right now. By the way, I'll have to have a sip of water. Give me a minute. Alright. So pretty much the next step is to mark solid support and resistance over here, but I will shut up for a little bit and just mark them real quick. I've explained before, and I think everybody that has watched it has been here when I explained it. So let's get into it. So we have one over here. Switch it to an orange. Okay, well, obviously we can mark this one because of many different reasons. Rejects multiple times, not just over here but over here as well. This rejection is not that rejection, so this could be a level as well. Most definitely is a level because it rejects multiple times over here. Rejection, rejection, rejection. Over here we kind of rejected. Okay, let's move further. Could be, could be. Yes, it absolutely is. Rejects, well, possibly we should, something like this. Something like this. Okay. So it rejects over here over here as well. Over here, rejects, many different rejections. This is actually very good. So, is there any rejection that we have left out? Any rejection that we have left out? Maybe somewhere over up here, but we're not really going to be using that area. But yes, over here we can mark this. I mean, okay, let's just backtrack a little bit. No, this is rejection for this. Yes, there is some sort of rejection over here, but we will have to find a different support resistance for this middle one. Perhaps this one, because it doesn't go down to the solid key level. You align it for, yeah, that's good. Did I move this? No. Okay. So any rejections we have left out, I think this is pretty solid enough. All right. So we do the same exact thing. Fibonacci. Well, I think this is our, something like this is our, no, okay, yeah, okay, this is our monthly Fibonacci starting from this point, so it's much greater. Let's just delete this boundary real quick. Perhaps this move, perhaps this one is, it could be good. Let me just check the rejections. It definitely could mark a more recent one. So something like this. That could be a better one actually, because it's a decent size. Could be a better one. I mean, I see this rejecting many different times, but let me just check the other one. So how about this? Let me just extend this so I can see it better. Give me a minute. Arrived, but anyways, we're still going to do the stream. Keep in mind, I'm not going to end the stream just because food is arrived. we gotta grind, dude. So the thing is, this, I think I see this one reacting less. I see this one reacting less if you really pay attention to it. It's just more choppier. It just goes above it. In this relevant, yeah, these two levels react over here as well, but it just reacts worse. I'm just going to mark the mark the most recent one, which is this one. This is just overall better. I like this one better. So what we're going to do is just get the orange and just mark it with a dashed line. Alright, something like that, just in the relevant space. Alright, then by the way, this might get cluttered on the weekly and the monthly and the daily time frames, but when we go down to the 1 hours, you're going to see it's really, really readable. It's actually really, really nice. And it's right, like it's literally the right amount of data that you need to get. So we up to the daily time frame, and this is going to be our last stop for support and resistance. We're not going to go any time frame below this one to mark actual support and resistance. We're going to use the daily time frame lastly. Okay, so first of all, do we see any lows that are not reacting off of, you know, any support and resistance that we have already marked? And I think the answer to that is yes over here. These couple of lows that we can see, perhaps, yeah, these couple of lows over here, pretty nice, something like this. All right, anything else? Well, we see this high, this high, this high. All right, how about let me see this one. Yeah, we could mark something over here as well, something like this. Yeah, that actually is pretty nice of a level. Okay, anything else is alright. We don't have to mark anything else. Alright, now we just mark quick Fibonacci, and I already know which one I'm going to mark over here. It's not really hard to decide. I think I'm going to mark it from, let's mark it from right around here. I'm going to mark this one, obviously. This is the most recent big move, and it's not really a retracement because it's literally, it tried going up many different times. Yes, we were just hitting the 0.5 now, but it's more like a reversal than a retracement. It's not really a quick move, so to speak. And let's just check if it reacts well enough. Let's check multiple different beginnings. So is this? Oh, dude, I think this is more flawless. Look at that. Oh man, yeah. Okay. Well, I think it's decided. I think it's decided. I mean, this one's good enough as well, but I think it's decided. Oh man. Yeah, okay. I'm going to mark this one. I'm going to mark this variation. Okay. So these are bounce points, by the way. These dashed lines over here are bounce points. Now the only difference between bounce points and actual support and resistance key levels are the fact that bounce points are not going to be, we are not really going to be drawing actual trading arenas on top of them. Maybe in between bounce point and bounce point, but not bounce point and key level. Key levels are separate things and they hold more value, and these bounce points or Fibonacci's are used to confirm key levels as well, to validate them more. Now our higher time frame analysis in terms of support resistance is complete. Now we go to the 1 hour time frame, and just show you guys, this is actually really clean. Look at it, it's really clean. It's very nice to look at, in my opinion, and it explains this sell over here that we have observed. So one thing we have observed before actually analyzing or getting the support resistance is that most likely there's going to be a sell, and you know, based on the MACD itself and the, you know, just overall trend direction, it's looking like a pretty alright sell. Now the thing is, we are coming from a bounce point right there, and as you can see over here, it's not only a bounce point, it's a trading arena's midpoint as well, which ultimately holds even more weight. Look at that. That's pretty flawless. That's very nice. Now I don't know if we could get into this position now. The thing is, analysis, generally speaking, you know, with me not explaining, yes, it most likely would have taken like 3 minutes less time, but at the same time, it's not really something that is all that much different. You know, an analysis, getting the right support resistance is not really something that you should hurry about, and there's always going to be some sort of setup that you're going to be able to take, so it's not really something that you need to worry about. we're going to mark the boundaries where it really starts getting overextended with the ATR. I don't know if you have it. No, we don't. Okay. So the ATR for previous day is 625. All right, 625. Something like, yeah, something like that. We can have it be precise a little bit. 625 right there. All right, so we are hitting the actual daily ranges, bottom predicted range, well, the normal range. The thing is, the way you need to interpret this, the daily ATR is the average daily movement for 14 days. And the thing is, why this is important is because if it exceeds, if any chart exceeds a daily ATR, or not even a daily ATR, just an ATR in general, let's say you're looking at a 4-hour time frame. If that 4-hour period in specific exceeds the 4-hour ATR, then if you don't have any sort of news bias, or whatever bias that would say otherwise, you are pretty much looking forward to having it perform a rebound. So it's not a outlandish thing to say that, obviously it's starting to get really overextended over here, because just by this alone you can observe that yes, it has went down really, really rapidly over the course of today, and we still are pretty much midway through the day. We have around 8 hours left. Well, not really midway, we are a little bit more, but 8 hours left from the day is not really something to play about. 8 hours worth of market data, especially because we are now in the US session. The US session is literally connected to this pair because of AUD USD. So 8 hours of data is not going to go most likely without actually being used up for some movement. Everybody, like the banks are trying to make money, all people are trying to make money, because in the US, especially on the Pacific coast, the thing is, many people are just waking up. It's past like on the east coast, it's past 9 a.m. but it's still prime time market time. So let's mark these two levels for the average daily movement. That's all I'm doing right now. It's not really support and resistance. This is just to highlight extremes. All right, and then we have this whole entire analysis that we have mapped up. Now, yes, I think it's going to sail down most likely over here, because we don't have anything in between. Perhaps maybe a 1 hour entry exit, but at the same time, wait a minute. Okay, well, I will have to end the stream because I have to go and well, not right now, we still have some time, but I will have to end the stream in about 40 minutes, sorry, 30 minutes, because I will have to help out my father to get him to a place. But yeah, that's pretty much it. So the thing is, entry exit wise, we might have some roadblock. And the thing is behind that is marking something like this over here in the past is not really something that we should be looking for. We should probably go and mark some sort of extension level, which is obviously going to be somewhere over here. Now, extension levels are literally just the fact that these, like, the extension levels are nothing crazy. These are just the minus points of this whole entire Fibonacci. Now, it could be looking something like this, but possibly something like this instead, because this one is just much bigger. Well, we'll have to see how well these apply, but let's see. Keep in mind, the point 1 is not something that we pay attention to in this instance. Well, this 27 rejected a little bit, so it's still in the books. But let's just test the other one. So something like this maybe. It's more like it. Yeah, it's more like it. Yeah, let's use this one instead. Yeah. All right. So pretty much we are hitting right now an extension point, which could well, we breached it. well, breaching it in this manner on the 1 hour time frame could pretty much mean that yes, we could potentially go down over here, but keep in mind our daily ATR is still to the extreme. It's at an extreme. So overall, this is what we are seeing. Now, if we go down over here rapidly, which is unlikely to happen, then we could get a confirmation right over here, and then we're gonna buy up right back to the midpoint over here. Now that's all, you know, a good idea, but it's not going to happen now. So what can we do now? It's best to stay out of the market for now, but at the same time, we could possibly prepare for a buy on this one, depending on the conditions of the market right then and there. Because it's really just, you know, if you're getting a trade idea, you're getting a day trade idea right now. Like you're getting a day trade idea hours into the future. That's not really how it works. Like you can get an idea, yes you can. You can get an idea, yes, of course you can. But at the same time, for you to execute, for you to be confirmed, and keep in mind this is a day trade. Swing trade would be a different case, but this is a day trade. Now, a day trade will have its own confirmations right then and there. So you will have to keep in mind when you are actually trying to place that trade. And perhaps some stalling in this area could help it to calm down the trend in itself, because it's not really a weak trend the last time I've seen it. So that's pretty much it. That's pretty much it for this pair. You know, obviously it's not really something, you know, like when I say like find a trade, you know, or like look for trades, yes we can analyze another pair, but you guys can see like it's not really much of a one-sided process. It's not like you sit down and in the first hour you find a trade. Yes, it could happen, does happen, but it doesn't happen all the time. So the thing is, I've already traded twice today, keep in mind guys, but I will look for more trades because I in general I would want to trade more today. But yeah, so the thing is, how does we measured, if I'm not mistaken, about, let's go back to the daily. How much did we measure on the ATR? I just deleted it. Something like this. 625. Okay, 631. Yeah, so 60 pips, 63 pips is the average movement. It's good enough. I mean, 70 pips would be ideal, but like 7 pip difference, not that big of a difference. The thing is, 63 pip divided by 3, 21 pips should be one wave on average. You know, it's not going to be rigid on average. And divided by 3, 7 pips should be the safe, very very conservative target, which is obviously it's a low amount. So a lot of people might be clicking off of this, clicking off of this whole entire trade idea over here because, you know, it's just not good enough movement, and that's completely valid. Completely valid. Keep in mind, you know, the thing is, you have many different options over here. You can practically wait for it to, you know, even tomorrow. I think I'm going to trade this tomorrow, especially because if you think about it, tomorrow it's going to have an entire different daily ATR trading arena, and then pretty much what would pretty much happen is if it doesn't get back up overnight, which is not an outlandish thing to think about, it could get back up overnight. But if it doesn't, then you could probably buy it up until the midpoint. Or if it does get up but to the midpoint and it just trickles around, you can buy it from the midpoint up to the next part of this station over here. The thing is, the way I like to look at this whole entire trading arena is kind of like train stations. So how the person that I learned this from tells it. So it's train stations. So pretty much these are 2 train stations. The red zones are 2 train stations over here. 1, 2. And this is kind of the middle. You know, this is where some passengers leave, some passengers, you know, get on and everything like that, but you don't know where the train is going to go if you're not looking for the confirmation itself. The thing is, these are 2 train stations. These are the key points. This could accelerate it or reject it. You have to look out for which way it's going to go. You have to use your mind, your brain practically to confirm your bias. Is it going to accelerate it or is it going to reject it? Or reason why it would accelerate it is because of something that lies within that zone or below that zone. For example, on GBP/USD we had this exact same thing. We had the daily 80 hours trading range and the bounce point right below it, and also we had news bias as well. Pretty solid bias. The thing is, I will check the chat. I've not really read it, so excuse me, guys, about that. But I've seen aces talking to people in there, which I appreciate. But yeah, so the thing is, if you guys got any questions about this, or I don't know what you guys think of this current analysis. I think it's pretty solid, but obviously it's up to you guys to decide if you can understand this or not. But let me know if I need to explain anything else about this. But at the same time, this is pretty much it. Anyways, the thing is, yeah, 80 USD, decent enough. You can probably sell it down. Uh, if it comes back right around the midpoint, you can sell it down definitely to the 618 if you have enough confirmations. But that's pretty much it. Now, for the Nasdaq, by the way, I want to show you guys the Nasdaq. I had this trade idea as well, but the trend in itself wasn't really strong, and my suspicion behind it is confirmed. But I had this trade idea over here, roughly buying from the midpoint, something like that. So quick 1-to-1 or something, and it rejected right on the entry exit. Now, the suspicion I had was because of the MACD, but as you can see, for that specific hour, it rejected, came back, and it just stalled. And the thing is, it stalled for long enough for me to deem it not strong enough. But at the same time, Nasdaq could be interesting as well. It's a really interesting thing to trade, by the way. It's a really fast moving instrument. The thing is, on the daily time frame over here, if you check it, we are pushing an all-time high, or actually not really, but this one pushed an all-time high pretty much. So it's a really unusual environment, but I encourage you guys to trade these environments because it's just different type of environment. If you can trade it, then it's only going to strengthen you. So that's pretty much what it's doing. But yeah, so it's looking like this is going to be coming to the end of our overall stream soon. But yeah, so if you guys got any questions, like I said, just make sure to put them in the chat, and we're gonna talk about it. By the way, I want to research if this sell position could be feasible or not. Okay, but that's one thing. Delete that. Okay, how about okay, this one. But it's going up. It's uptrend, most likely. Okay, I think I have my bias on this. I think I'm getting to have my bias on this. What is it doing? Moving up. You can write it off as moving up. Alright, so at least 2 time frames are consistently moving up, by the way. So the thing is, my bias overall for this one is going to be buy, most definitely. So anything other than buy would be a counter trend, and I don't think you should counter trend in this current market. Now the thing is, let me just drive this thing up right here. Trading arena. Guys, we might actually find a trade. Might actually find a trade real quick before we end this. Might actually find one. Alright, so something like that. Just extend it. Alright. Midpoint is very important. Okay. Right there. So the thing is, for me, I will have to wait and see to have it be established over here above this. I will set alerts. I want to see at least like a 15-minute candle, you know, pushing up above it. It's really, yeah, it could be good. Let me just measure an ATR for a stop loss. 2 times ATR. 80, somewhere there. Okay, that seems solid enough. Okay, so this would be my stop loss somewhere here. Okay. And we could trade it to the midpoint or something like this. This, keep in mind, guys, this would be the first order. First order, and then you're going to scale into the order. You're going to use risk management to increase your risk to reward. So don't get scared upon seeing that whole entire thing right there. It's not something that's complicated. But yeah, so the thing is, this is going to be our first order, and it's a really high probability setup over here based on many different things. But also you have to check out different reasonings behind this trade. So for example, let's delete this. For example, Bollinger Bands. I don't know if the Bollinger Bands is good or not. I think it's pushing the top. Now, the 4 hour is still good to go. So we could possibly trade it till somewhere there. You know, it's not something that you need to worry about. So how about the RSI? Let's check the RSI as well. RSI is pushing up over here on the 4 hour. 4 hour looking good. So if we are not going to take this on the 1 hour, then we are going to take this on the 4 hour. I have to hurry up because I want to end this stream because I gotta go and do something real quick. But yeah, so this is not extremed out yet. This is not at an extreme yet. Look at that. So I think this trade over here could possibly be a good trade. Could most likely take this. But yeah, pay attention to 15-minute. Make sure you get a good entry, all that stuff. Not this one I'm talking about. I'm talking about like more like this one. Make sure you get a good entry. Make sure it's confirmed, and you can probably trade it right around this this midpoint. That's pretty much it. So anything like if the price steps into the midpoint, it's over. It's over. You can hold it for longer if you want to, but it's most likely over. All right. So that's pretty much it. Thank you guys for being here, and I really appreciate you. And if you have any questions, like I said, just shoot it. I'm going to answer it, but I will have to go. So we explained 2 trades, and we got a trade idea listed out. All right. So if that sounds good to you guys, I'm going to be going now, and see you guys in the next one. This was an hour and a half of pure value. I didn't stop talking. So the thing is, I really hope you guys learned something, and it's already going. Look at that. I should have set a buy stop. I was thinking, dude, should I set a buy stop, or should I just wait for a closure? And I was like, you know what, I'm just going to wait for a closure. It's already going. Anyways, see you guys, and see you guys in the next one. I'm going to do another stream either tomorrow or the day after. Okay, so we're going to set up the event for it, so make sure to watch out for that. So yeah, see you guys, and have a great rest of your trading day. Goodbye.